Now, in today's class, I'm going to use the term security, but I'm probably going to say the euro, I'm probably going to say Bitcoin, I'm probably going to say Apple and Facebook, but I'm not referring to any of those specific assets, so to speak. I'm referring to all tradable assets that exist in the open markets. It gets very boring just saying asset, security, security. I also intermix the terms investing and trading. But we know today we're here because we are traders. There's a difference between investing and trading, and we know the difference. Okay. But again, it gets very long and boring when I keep saying trading, 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 online trading, 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 trading. So it gets a little bit nicer when I mix it up with some other terms, but we know exactly what we're talking about. So just a little bit of a little piece of information before we get started. Now, a lot of you have attended my classes. I've been teaching for 14 years now, and I love teaching and I love sharing knowledge with you. And I find it just like a professor in a university standing up there on the podium lecturing and giving his little slideshows and his little presentations. His students are actually learning something. But then there's also times when I lecture like a parent lectures their child. And this is one of those classes. I don't want to make you feel like I'm talking down to you, because I'm not. And I don't want you to feel like I'm being parental, because I'm not. I do want to share something with you, but building your trading plan is such an important aspect of trading that it's very important to me to get across the point of how important this is. Okay. Because you're not going to find a single successful guy out there who's trading it doesn't have his stuff written down. And we're not talking about sitting there with a notepad and writing everything down, but most people today, thanks to computers, have Excel spreadsheets, and they have all kinds of documents and all kinds of layout, and you can research your prior strategies very easily by pulling them up and naming them properly so that you can find them quickly, and you know how you can look and see how you did on certain assets and how how certain strategies paid off in the long term, or what you did last time you saw a particular pattern. Or what happened last time gold was trading around the $1,600 range. Okay. You can look it up in what you did, because we have these marvelous things called computers. But in order to become a successful trader, you need to develop a written trading plan where you put all the necessary trading rules. Now, this is not a strategy. This is where little people, well, not little people, this is where some people mix what I'm trying to say. Your trading plan is technically your Bible. It covers every aspect of your trading, not just your strategy. Your strategy is something that you drop into your plan. Because like me, I have like 25 different strategies. I have my versatile trade setup strategy. I have my triangle strategy. I have my pre-FOMC strategy. I have all, okay. I can pick those up and drop them into my existing trading plans. They're pieces of that plan. And that's what I said today. It's very nice because we have the ability to use computers and sort and put things together. But your trading plan, number one, is different for each trader. It's different because we have different trading styles, we have different strategies, we have different risk levels and different market experience, because your trading plan encompasses your risk tolerance and how you're going to calculate risk. What are your maximum minimums that you'll accept on a trade? Okay. It also has how you're going to place your stop losses, how you're going to place them in volatile markets, how you're going to place them in slow moving markets. Okay. Because this doesn't change from day to day. It also incorporates your exit strategies. Most people don't think about it, but you have an exit plan. Too many people put stop losses and take profits in their, and then they just sit back. I have quite involved exit plans because entering a trade only steps you into the world of trading. Until you actually enter a trade, you're not in the game. But now you've stepped in the game. Okay. So now that you're in the game, you have to play the game. So you need to have a plan on what to do when the market's not doing what you thought it was to do, when the market's doing exactly what you thought it would do. Like a lot of times, my plan is if an asset moves way into profit, I'll move my stop up. I'll move it to trailing stop loss. I'll sell off 50% of my trade and book my profit. And when I hit the next level, I'll sell off 35 or 40%. And I keep selling off, but I never don't leave the market. But this is only in certain aspects. There's some aspects when I say I'm going to enter my trade at 117.42 and I'm expecting it to go to 117.97, and I see it goes up, slowly, but then it dips down to and forms a new low, lower than I'm not stopped out yet, but lower than what I expected at that point. I'm saying, the market's not doing what I thought it was going to do. Okay, maybe I should close my trade, but that is in my plan. So a trading plan should be thought of as a template for trading the markets. And I know this sounds very boring. It sounds very monotonous. It sounds like a lot of work. But that's exactly what it is, because trading is work. There is no thing of making money without working. Now, perhaps an even better way to describe a trading plan is that it's a checklist. This checklist will contain every aspect of making a trade in a logical step-by-step sequence that acts as your objective guide to trading the markets. In essence, a trading plan will state your overall short and long-term goals as a trader, will provide you with clear checklists of how to achieve them. A lot of traders don't think about their daily routine. Oh, my 1 o'clock meeting got canceled. Let me go on my platform. Let's see what's going on. Maybe I'll initiate a trade. I only limit my trades to certain times of the day and certain days of the week, and that's it. The rest of the time, I'm doing my homework. I'm doing my analysis. I'm writing up my trading plans. I'm analyzing my trades. I'm not looking for trading opportunities because my plan says on Tuesdays and Thursdays after 1 o'clock, I can't make a trade. Not because there's any law against it, not because it is forcing me not to just keep chasing my platform. I need that time to do research. I need that time to do analytics. I need that time to review. Okay. Then I also have my trading plan, the assets that I will trade. Not that assets I'm going to trade today, not the assets I'm looking at trading. The only assets that I am willing to trade. Now, you could be a tech trader. You could say, I'm only trading stocks. I'm only trading Facebook, Apple, Google, Lemonade, and that's it. Because you know what? None of us can be experts in many, 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 many things. Okay. I only trade in my early days in the 70s, I only traded agriculturals, and that was it. I traded 4 assets, but then it was a slower market. We didn't have the internet. We were sitting in, we didn't even have live charting. I was sitting there charting by hand. Okay. But you can't be an expert and you can't be all over the place. And unfortunately, one of the biggest downfalls of these new modern platforms, these wonderful CFD platforms, they offer you hundreds of assets all over the market. And I see people 1 minute trading Facebook, next minute trading gold, the next minute trading the euro, the next minute trading coffee, the next minute trading the Japanese yen, and then they're back over to trade HSBC. I don't know how you could become an expert in all of those. Just can't. So the question is, where do I start? Now, let me tell you. First of all, if you look up on your screen, there's a little section that says handouts. I've put together for you what I call the combined trading plan handout. It's yours free. There's nothing I'm signing up for, nothing. Just click the download button. There is no format. There's no guideline. There's no even software for building a trading plan. One of my clients a couple of weeks ago, and I have my MBA in taxation and finance. I have my CPA. I was an accountant for many years, and one of my clients called and asked me and said, "Can you help me on a business plan for an education, a Forex education site?" I said, "Yeah." It's not stuff I normally do. It's not what I do for clients. But yeah, he was a good client. I said I'd help him out. Well, I went to Business in Box, downloaded the software, paid the $29.99 for it, and it gave me everything I needed. It gave me big, beautiful spreadsheets. All I had to do was drop in, what they were selling, how they were going to sell it, everything else. It calculated, gave me beautiful spreadsheets. It gave me a plan. It gave me the executive summary. It gave me a marketing, and all I had to do was customize. There's nothing like that for trading. Absolutely nothing. So I gave you this handout that'll help you a little bit, but it's the most. I searched the whole internet to see if I could find some type of a more detailed step-by-step guide, and there just isn't. Okay, so the question is, where do you begin? Well, you're not going to make this huge project. You're going to stop everything else on and work on your thesis for your trading. So whether you're trading off of price action setups or key structure, or you've got one strategy in it, maybe you have a key reversal strategy, whatever it is, write it down, get it out of your head, and put it on a piece of paper. Put it in a step-by-step Excel spreadsheet. Put it, in some type of a template, because you're going to find when you do write this all down, you're missing steps. You're going to find out that when you start to write it down, you're doing too many things in your head, and you don't, and you're not covering all of your bases. So you're going to figure out you're not doing something logically, or you're missing something. And guess what? You'll be able to fill that in your steps, and you'll slowly build your own strategy. And now you don't have to start out from scratch. You can start out with some strategy that you've been using. If you haven't used anything yet, find some analyst, find some guru that you trust, that you like what he's preaching. Find, some strategy, but break it down and make it your own. Don't ever follow somebody else's, do this, do that. When that happens, do that, do that, do that, do that, and then make a trade. Protect your money. It's more important. And as you adjust it and as you trade it and use it in a demo account, write those little steps in, when it worked well, when it didn't work well, what you could tweak. It sounds like a lot of work, doesn't it? Well, you haven't even started your trading plan. You're just working on one of your strategies. So having written strategies with your risk tolerance and money management is like having a market blueprint. This blueprint is essential for developing the discipline that will lead you to the road for success. If you find yourself not following the rules for your trading plan, then you are deviating from your plan. So, like I said, I don't want you to feel like I'm lecturing you, but this is something I do also. It's something that will take you a long time. It's something that will grow with you as you become a better trader, that you can keep adding to. But you need to have like a routine for your trading. I mean, whether you have a regular job, whether you're a freelancer, whether you're a high-end professional, whether you have your own business, I guarantee you own that store in the mall that's really successful. Okay? You're making tons of money in that retail store. But I guarantee you have a routine. You get to the store at 9 o'clock. The first thing you do is you come in and flip the lights. You check the turn off the alarm. You go back to back of your office. You check the receipts for yesterday. You check, they make sure the computer's up and running. Check to see what orders came in the back. Make sure how your employees are doing. Check your bank statement. Whatever process you do, but you have this process. Every business has this process, but it incorporates everything, because you know what? If you open up the store and you're making tons of money, but you're neglecting your inventory control, you find out, well, I'm buying lots of inventory, but people are stealing me blind. Well, whose fault is that? Yours. Or you weren't watching the inventory and you found out that yellow was selling like crazy and pink wasn't selling at all. And you end up with lots of pink in your warehouse and your storage rooms and no yellow. And your sales are going down because everybody's coming to the store saying, do you have a yellow blouse? And you're saying, no, I only have pink. Why? Because you weren't doing your routine. You weren't checking everything thoroughly. So during your trading phase, you will follow your checklist. And this is crucial in order to put yourself in a high probability trading opportunity. Now, the other thing is, since you're going to start out with your strategies, think of them as filters. What you're trying to do is filter out every trade. If I throw 100 potential trades at you, you want to say to me, Barry, I throw that one out. I throw that one out. I'm doing all this work, and all I'm doing is throwing out these, because you want to end up only with your one high probability trade. So these things will tell you what to look for in the market, what you want to see before entering a trade. In your post-market phase, your main activity will be record keeping your trades. Trading journal is important because it'll allow you to analyze your trades to find out whether you follow a trading plan or not. Remember, a long time ago, I had a client who was taking classes from me, and he was a big trader, and he was a one-on-one client for education. And I was talking to him, on a fairly regular basis, and he was really working hard. And every month he seemed to be a little bit ahead, but he was doing lots of work and lots of trading and making no headway. Well, when I sat down with him, we analyzed his trades. We found out he was doing really good on the euro US dollar, but for some reason he liked gold. And for some reason in his mind, his gold trades were really successful, because you know what? He had 50% that were really successful, and he remembered them and stuck in his mind. But he didn't realize he had 50% that weren't successful, but his risk was too high. So he was eating up the profit he made on those other sales. Whereas euro US dollar strategy was better, and his risk reward ratio was better. So he was actually making more money on the euro US dollar. If we eventually took all those gold trades, threw them in the trash can, and the next month he traded just the euro US dollar following the same rules he was using. And guess what he said to me? I made money this month. Because what happens is you don't realize, time goes by, your brain remembers something. You had that one phenomenal trade, and that's all your brain is thinking about. And you have all these little trades that are losing money, but you forgot to see them. So you need to make sure that you maintain a trading journal, which logs all of your trades. Now, fortunately today, this is really easy with online platforms, and especially out of Excel, because usually it's click the download button on your account, and download all of your trades, see exactly what they were, when they entered the market, how you exited the market, see everything. But that's not what we're here about. Downloading at the end of the month and just seeing a bunch of trades doesn't do you any good. It's, sure, I executed a euro US dollar trade. I opened at 117. I set my stop loss at 119, 117.92. I had my take profit, and I did this trade on a Monday morning, and it did exactly, in your notes, it says it did exactly what I said. I had exited the market at 117.92, but I had sold off half my trade, and I moved my stop loss up to a trailing stop loss after I did this. Well, now you have a history of your trade and what you were thinking and what you did during that trade. Because when you go back a month later to analyze all of your trades, just seeing a bunch of numbers on a piece of paper, you can have a losing trade that was a very good trade. You did everything right, and you got out of the trade with a small loss because you set your risk reward ratios right. So that's not a bad trade, but you need to go back and analyze everything from your exit point to your stop loss to how you handle. A lot of times you go back afterwards and look at that. I set my take profit point too high. The asset moved all the way up to that resistance level, bounced off and went back down, and I ended up making very little profit. But if I would have set my limit order or my take profit order a little bit lower, I would have closed out with a nice little profit. Maybe whatever formula you're using for your risk reward ratio and your target point are incorrect. Now, I made up this word. It's called stick-to-itness. Okay. Creating a trading plan is highly useful as it reduces the possibility of bad or irrational decisions based on emotion. If you've written your trading plan, then you have a trading filter that will filter only high probability trading opportunities. It is important to have a written plan because in order to have a high level of discipline, you should read it every day. The key to discipline and objective Forex trading is to establish a trading plan where you put all the necessary rules and stick to it. Now, I've given this class a lot. And if I go back and ask 100 traders that attended the class to send me a copy of the trading plan, I guarantee I won't get any. I don't think I've ever seen somebody's finished trading plan. Okay. Now, sometimes it's a lot because mine is spread out all over the place. I could, put it, it's all in folders and I can find it all fast, but my strategies over here and they're all sectioned down and broken out. Then my trading history, my trading journals over here and my profit and my, I understand that, but I still could give you my entry rules, my exit rules. I have it, but nobody's ever sent one to me. Now, here is my, and we're going to talk about it a lot, but my essential point. If you're a business owner, okay, you've got to have a plan. Okay. Say, and I'm going to give you a story. But say for some reason, we're going to go back to that pink and yellow guy with the retail store in the mall that's making a ton of money. For some reason, I can't tell you what it is because I wouldn't be in retail if my life depended on it. Okay. This guy has had a dream all of his life of having a fashion store in the mall. Now, he's worked a regular job. He's been working for years. His kids are grown. And he's walking through the mall with his wife one day. And we're talking about way pre-corona. And here is a shop that's up for rent in a mall. That's a perfect location. And he says to his wife, honey, that's like the perfect place for me to open that shop I want. And she says to me, you know what? We've saved all of our money. We've saved all our lives. You're ready for retirement. I'm still working. If we're going to do this and you want to really do this, it's the right time of our life. So instead of spending $50,000 or $100,000 on an RV camper, this is what you want to do. Let's do it. Well, he's so excited. He didn't know what to do. So he goes home and he starts making up plans in his head. And he realizes, it's going to take a lot of money to get the store open, to buy the inventory for the whole store, to pay for the signs, to decorate the store, to pay the deposits. And he talks to his wife, and they've got liquid cash and they have assets. But he's not going to drain everything. So he calls his folks on the phone and said, would you invest $50,000 in my new business? And his folks say, of course, you're our son. We'll give you the $50,000. Calls his brother. His brother says, yeah, we'll give you $25,000. Calls his best friend, yeah, we'll give you $25,000. Okay. He's now raised more money than he thinks he's ever going to need. But he hasn't put anything on paper yet. So he calls the real estate guy, makes an appointment to go over and see the shop, talks to the guy about the rental, and the guy tells him the price per square foot, the monthly upkeep, the HVAC, the insurance requirements, everything, and how it has to be built out, when it has to be built out, who he can use to do the build outs, what the mall specification, the advertising budget for the malls, the hours you have to be. And he said, whoa, this is way more than I ever thought about in my little head of opening up a shop. Oh, he didn't know he needed all these special insurances. He didn't know he needed to participate in mall advertising. He didn't know he needed to be open every day from 9 o'clock in the morning until 9 o'clock at night. And these are the only, and all these restrictions. But that's fine. It's the perfect location. But now his budget's way out of whack. But he's still going for it. Well, this is you guys. Okay, you decide you want to be a trader. You're putting your toe in the water, and you're getting it all together. Yeah. He hires the contractor to build out. He hires the lawyer to set up the company and does all that. And he's going through a lot more cash than he expected. He never thought a lawyer's going to cost him $10,000 and an accountant for $5,000, and he didn't know he's going to have to lay out $20,000 for the insurances up front. Never thought about the cost of internet and computer operations and security systems and everything. Before he knows it, he's gone way past his budget and he hasn't even gotten ready to advertise or buy inventory yet. But he's still doing it. He says he calls his folks and his brother and and it's time for them to put in their money. So they all come over for a meeting, and now he's going to tell them about everything that's going on, and everybody's happy. Everybody's going to give them stand behind the thing, except they all want. They have questions. Are we getting interest in the business? Are we getting paid back in interest? How are our payments? Are we profit sharing? How are we protected? Are we buying shares in a corporation? Or we just making personal loans to you that you're going to guarantee? What's our tax scenario? Wow, he's lost. He's got to start putting all this on paper. They want contracts. They don't want necessarily something from a lawyer, but they want something formalized. Well, guess what? This is your trading plan. You're putting it all together. You've gathered this down, but you're putting it down. So he talks to the lawyer, he talks to the accountant, they tell him what the standard stuff would be, and they give him some standard forms. He gives everybody what they want, and they all give him the money. And again, he's at the point where he's getting ready to order his inventory, and he not only has to order inventory to open the shop, he has to order inventory to store in the shop, and he has to order inventory to come to replace what's going out the door, for holiday sales. Well, this is 3 times more than he expected. So he goes to the bank. I'm going to finish the story soon, sorry. But he goes to the bank, and the bank says, okay, we need a business plan. We want to see your expenses. We want to see your budget. We want to see your profit. We want to see all of your costs. We want to see what your plan is, how you're going to advertise, how much personnel. He hasn't even thought about how much is it going to cost him per hour per people. How many people does he have? How many hours per week does he have to? What's his payroll going to be? This is what the bank wants. Now, as a trader, you want the same thing. You need to create a full detailed trading plan. Now, there are already a million articles on the web about trading plans. But what separates this class from the rest is I'll show you what to create, but there is no 10-minute plan. Okay. So, like I said, in most lines of business, time is the main driver for evaluating your performance or anything else. In the markets, time is of no consequence to us. Time is irrelevant because first thing about it is when you're opening an account and you're getting ready to trade, leaving your money sit there doesn't cost you any money. You have no electricity, you have no insurance, you have no overhead. And the fact is, you're not missing the Christmas sales because the market has continuous opportunities. Anybody who thinks that they can only have an opportunity on Bitcoin tomorrow at 2 o'clock is out of their minds. There are a billion opportunities in the market. So there's never a lost opportunity. You're never chasing anything. So you have all the time in the world to build this. You have all the time in the world to trade on a demo platform to test out everything. Because evaluation and evaluating your performance is what's going to be critical. Because you know what? You got your shop open, you got it open up, a couple weeks before the Christmas holidays, got everything done. You got through Christmas, and you may, I'm not sure whether you made money yet, but you sold, your sales were good, everything went well. There were some iffy spots. There were some days you had to have your wife behind the register because you were short people, but you survived. Now you have to learn from your mistakes so that next season you survive better. So the question is, how are you going to evaluate your performance? And this is part of your trading plan. Now, my rule of thumb, this is personal. You can change it to whatever you want. But for me, I stop after every 10 trades. I don't make another trade until I've evaluated everything. It's my rules, and I follow my rules. So Doesn't matter whether you're a fast trader and you're doing because if you want to say, okay, if you're a guy who's trading 5 or 6 trades a day and you're trading 5 days a week, well, you could say, I'll do my analysis after 25 trades. You can even say, I'll do my analysis at the end of every week on Saturday. You decide. But you have to decide what you'll use for your period. And then I stop trading everything. I close all of my open trades. I stop everything, period, until I'm finished my complete performance evaluation and looked at how everything was going along. So what is the number of trades you will use when evaluating your activity? And I'm not saying make it complex. I don't. I use the keep it simple, stupid method, the KISS method. All I want to do is, after my 10 trades, go back and consciously look at them and say, okay, this didn't work, that worked, this didn't work. Okay. I'm not considering analyzing and saying I made 10.247%. Don't care. I just want to make sure that I am not missing out on something. I'm not realizing that something's happening that it's not. Sometimes markets shift. Sometimes fear gets in the market. You don't realize it, or we move to safe haven trades, or an asset shifts and you haven't shifted your strategies. Okay. Now, this one's a toughie because I know a lot of you guys trade based on your free time. But I firmly believe that everybody should limit their trading activity and limit their trading time. First of all, you own the markets when you limit it. The markets aren't owning you. The second thing is markets exhibit different personalities, different days of the week and different times of the day. So if you can understand the personality that you're dealing with, you can better make your trades. You can better apply your strategies. So if you can get yourself in the frame of mind that the analysis, the filtering system, the strategies are more important and more enjoyable to you than the actual trade. And that you just want to get through the trading so you can go off and do the fun stuff, you'll see it works a lot better. Imagine, we have a pro football team. They go through scrimmages, they go through practices, they go through all types of training. They spend hours looking at plays. They spend hours researching their opponents, the team that they're going to play on Sunday. They know everything about every player on every team. They spend hours doing that. And then on Sunday, they get to take the field. They execute their plays just like they were supposed to, and they win. Was the gratification just that you won on Sunday, or did you get the gratification all week long because you said, you know what? I outsmarted him because I planned better than him, and I knew he was going to do that, and I knew exactly what play was going to go because I studied it. And so for next week, I want to study the next team because I want to outsmart them again this week. So that's what it's all about, is defining your edge and figuring out how you can be better. Identify the assets you'll trade. Know who your opponents are. Because a goal without just a plan is just a wish. Incorporate your trading strategies. Because believe me, too many people spend too much time trying to build these elaborate strategies they think they're going to beat the markets with. But a strategy is simply something that helps you execute a trade. It's what enters you into the game. It's just one of the steps in the process. But you want to determine what your daily steps are. Like the first thing I do when I get up in the mornings, I quickly go and look and see what all the asset prices are. Then I go look quickly at the economics counter. I go back to the assets I'm charting, check out where they are, see where my levels of support and resistance are, see if I see any patterns developing. And then I'll go off to my coffee and my breakfast. But this is then I come back and I update all of my charts. I haven't looked at a trade. I'm not even thinking about trading. But this is my core daily steps. You don't have to follow my steps. Now, determining how, where, when you're going to place your stop loss, how much money you're going to have in the market. Now, a lot of people say, okay, I'll use a 3-to-1 stop loss ratio, and they have all kinds of money in the market. And then I'll look at them and they'll say to me, can you help me with this? Can you take a look at this? And I'll go look at their account, and they've got 18 trades open with $200 risk on each trade. Okay. That means they've got $3,600 of risk in the market. Okay. Why? I have a now that's you're only those people are only open small trades. Imagine if you're opening $10,000 trades and you had 18 trades open and exposed in the market. You got to figure out how much your stop loss, where your stop loss will be, what your risk reward ratio will be, but also how much money you can have open in the market at any given time. Okay. What can be happening? Okay. Because the volatility can easily change in the entire market in minutes. And every one of those trades could end up stopping out as a loss. All of a sudden, you lost $3,600 because you had too much money in the market. Even though every one of those fit your risk reward ratio, you had too much money in the market. And then how you would exit, when you would exit. Now, I mentioned this before. I have many exit strategies. And I'm constantly updating and applying depending on how the asset is moved. Like I said, if I open a euro trade at 117 with the expectation going to 117.50, and all of a sudden it surges up to 117.30, believe me, I've moved my stop loss all the way up there. I've sold half my position, booked that profit, kept the position open, because now I'm in money. I'm trading with somebody else's money at this point. But on the other hand, if it's slowly doing exactly what I thought and moving it up to that level of resistance, I leave my trade going as it was. Where if it turns slightly against me for some reason after I open the position, and I'm just saying, this is not what I thought was going to happen in my head, I exit my position. So the key to success is really about the hard work. It isn't about, too many people think it's all about trading. Trading. Trading is the byproduct of all of this work. Trading's you winning the game on Sunday. Trading is being the star quarterback. Trading could be, you know what? Your team didn't win, but you know what? You ran for more yards than anybody else did. Now, one of the keys to trading and part of your trading plan is when to take breaks. Now, my rule of thumb is after every 100 trades that are executed, I take a break. I take the next day. I'm not talking about going on a holiday. I take the next day and I do stuff I like. I say, I'm not looking at the platforms. I'm not looking at my charts. I'm not checking the news. I'm just taking a day away from the markets. What I'm doing is I'm exercising control. And when you exercise control, you keep your emotions in check because you're in charge. And by doing so, you're kind of telling the markets, I'm the boss. But it's really you're telling yourself. And I'm not taking it off. I'm going to take a 3-day weekend. I'm not talking. I'm going to, go out fishing for the day. But you could go fishing for the day. It's just a day I'll do other things outside of my trading. And there's also days, like I told you, before you know, you have 18 trades open in the market, and the market goes crazy against you. You lose your shirt. You know what? Close your computer. Don't get mad. Close your computer and leave. But on the other hand, you can have 2 really good trades early in the morning and make a lot of funds. Don't say, you know what? Don't get yourself overly excited. Close your computer again. Take the rest of the day off. Because what happens is when you've made some extra money too fast, you'll tend to get a little bit lax in your trading and you'll end up losing it back into the market. And when you've had a losing streak, you'll tend to again get lax and keep on chasing bad trades. It's easiest to say, you know what? I'm going to take a break and come back clean tomorrow. So on your screen is, and I put it in that little handout, This is a trading plan that everybody's been passing around. It's garbage. It's like, how many trades will I use to measure my performance? What time I trade? It's not a, I mean, just writing your plan should have 100 questions to it. So I've tried to give you some guidance to go to. I've given you a copy of this in there, but I've also given you a more involved one. But please, this is probably the most important step and decision you can make in your trading career. And it's what's going to get you going down the right road and keep you trading for a long time. Thank you very much for joining us today. Good luck in your trading, and try to start writing things down.